Property prices are a great topic. People love talking about it. I know I do. Could there be some cause for optimism? Could we be on the cusp of a market, of the start of a market boom? You'd have to be brave to say so, and I would at least. I'll tell you what. I'll at least tell you some of the fundamentals, some of the undercurrents working in favour of property price increases right now, and some of my own gut feeling from past kind of coming off the bottom that I've seen in the past couple of decades. So, the pillars that I think might be some support to the property market. We have got the government, obviously heading into an election year. Probably they know that when people have better property prices, they do feel richer, they feel happier, and they spend more. And we desperately do need people to spend more right now in the economy. So one of the things that we have seen, of course, is there's all sorts of little things. Of course, we've already seen things like the tax rules around property investment go through and stuff. But on the horizon, if you've got your overseas buyer ban, maybe there'll be some relaxation in there. And again, Winston will probably have a lot to say around that. That could actually mean, we don't have a huge flood of people ringing up from abroad trying to buy property here. But what we do see is recent migrants, sometimes they have to check their resident permit and the number of consecutive days they've stayed here before they can buy. So it might speed up the purchases of migrants or people that do want to help out their kids with homes in New Zealand. So that is one positive thing. The other thing is this tension that has been there between the retail banks and the central banks around how much capital the retail banks should hold. Now, I think that's actually going to have a bigger impact than we think. In terms of actual interest rates or the cost of funds, that will have some impact. How much of an impact? Reading through the past kind of research, it felt like there could be anywhere from 0.2 to 0.4% difference if the central bank was to say to the retail banks, actually, you know what, we can go back to the good old days and you don't have to hold as much capital. They have been having to hold steadily more capital over the last few years, trying to aim for a certain target by 2028. 0.2 to 0.4% is complete guesswork, okay? I've got to say that there's a debate around that, and really that's just my own kind of very basic understanding. I'm not an economist. But it will mean the banks are quite eager to lend as well. If they're holding less capital, the amount of funds they can put out in the economy will increase, and then that will have a multiplier effect of how that fund rolls around and creates more debt. So I think that will have a bigger impact than I think we're predicting. Just as when they were introduced, the central bank, the retail banks of course would say that the central bank had underestimated the impact on the economy. So those are kind of the two big things, I think. Apart from that, of course, the central bank has already indicated that the OCR will be moving down, and they have actually been a little bit more surprising in their last comments on the downside for where the interest rates are going to head. Again, positive for homeowners. The third thing, this leads me to my third thing, and this is more of a gut feeling thing that I've seen in the past. When you have properties, quite a few in good towns up and down the country, where the gross yield, the rent you can obtain from the property, is around 6.5% to 7.5% is attainable, sometimes with a little bit of a do-up. That, not in Auckland. And when the interest rates start to touch 4.75 and below, it gets to that point where you can really have the prospect of covering the rates and insurance along with the interest bill. Suddenly, that kind of proposition becomes like almost a no-brainer. And I remember seeing this when I started my investment journey probably about 15 years ago, and scratching my head and going, actually, you know what, these houses look like they're below cost, and it looks like everything pays for itself. Where's the catch? And, of course, it didn't seem logical, and then a few years later the prices went up and it made itself more logical with that variable changing. I feel like we're there again. It does feel like that, and I think there's some great opportunities out there. So, yeah, look, it would... all I'm going to say is it's definitely a great time to probably start really thinking about getting into the property market if you're going to do that in the future anyway. All the kind of undercurrents out there are really working in favour of property price price pressure upwards, I think, going forward. But thank you for listening. Again, that's just very basic advice. I'm a mortgage expert, not a generalist financial expert in terms of property disposal or acquiring. But do contact us if you want to look at your cash flow and things around properties or mortgages and your ability to get one. Hamish at monline.co.nz.